What's going on, folks? Good morning, everyone. I'm your host, Ryan Rosbiani, and welcome to Market Simplified on the Place Your Trades Network. We're the network that focuses on trading daily options using CME Group's event contracts to trade indexes, metals, energies, and Bitcoin futures markets. Today's broadcast is brought to you by Tradeovate, which has built a custom app dedicated to trading event contracts, which is what we use here at Place Your Trades. Welcome, folks, to another stream. I'm really excited to talk with you all. We had an exciting day yesterday with the FOMC. Exciting might be a bit of a stretch there because almost everything that the market was expecting, 98% of what the market was expecting happened. And so 98% of the markets were expecting a 25 basis point rate hike. We got a 25 basis point rate hike. And we even got a chiller Jerome Powell. So if you're new to the stream, welcome to the channel. Subscribe to the channel, hit the like button, join the Place Your Trades Network, sign up for Tradeovate, which I'll explain to you guys later what that is. It's a really cool tool you can use for trading and getting used to trading, especially for newer traders. And if you want to kind of mitigate your risk when you're trading, it's a really cool tool. But I want to talk about FOMC first. We'll do some market overview, going over some events. We had some really good market data that came out today. I want to talk about some market data that's coming out tomorrow, the FOMC that came out yesterday. And then I want to do some price action because there's some crazy price action thanks to the earnings that are happening this week. And it's been a really, really wild week with earnings. So we're going to discuss that. And then we're going to discuss some event contracts. I think that'll be a lot of fun. So let's go ahead and jump into the FOMC document that came out yesterday. Let me zoom in so you can see everything. And this is a fun one. This is going to be interesting because, again, like I said, 98% of the markets were expecting this 5.25 to 5.5% interest rate hike. And we got it. And then they came out and essentially were talking about, hey, we want to get to 2%. They've been talking about that, but then they reiterated that getting to a 2% could take much longer. And a lot of people have known this because inflation is one of those things. It's not a straight shot. You can't just raise rates and expect the market to react right away and inflation to come down. No, you have uphill battles. You have variables that kick in that we weren't expecting. For example, the Russia-Ukraine war was a variable that sent a CPI to 9.1. That was not expected to cause energy prices to go up. But unfortunately, it did. So that was one factor that kind of really sucked, and it kind of probably was what caused a lot of the stuff to going on. Now, a lot of stuff happened that's not in this document that I want to discuss with you, mainly being that Jerome Powell and them said the Fed believe that they will not hit a recession. A recession won't be happening. Now, I'm in the camp that I'm kind of skeptical about that being said and that being reiterated, but he said it, so I'm going to let you guys know about it. Again, they also said that we're going to be focusing on core inflation. Hasn't come down as much as we wanted to. It's come down, but not as much as we wanted to. So that's another thing to kind of keep in mind. Speaking of which, he also hit on the labor market, saying the labor markets are still strong. He still wants to destroy the labor market for some reason, which I don't understand why he wants to put so many people out of work. But the guy wants to do what the guy wants to do. Inflation is adjusting. Labor markets are strong. Consumer confidence data came out strong. But today we had a very, very key piece of data, which I think is what inclined him to say that we will not be going into a recession. Again, his words, not mine. It was our GDP data. So GDP data, preliminary print number 1, came out for Q2. I believe this is preliminary print number 1, and I'm 90% sure, but we're going to double check. Came out. The previous was 2.0. Estimate was 1.8. Slaughtered with a 2.4. Yeah, this is preliminary print number 1. Slaughtered with 2.4%. This is a lot higher growth for the economy than we were expecting, which creates a lot of optimism for the market and why we saw the markets have a $3 gap up in SPY going into the open. This was exciting. This was cool. This was fun to see, but I don't think we're out of the woods. But I have to say that I was very happy to see this. The other thing, not a lot talked about this one, but PCE price index for Q2, preliminary print number 1 again. Last time was 4.1%, down to 2.6%. So they're estimating that PCE by the end of Q2 will come down to 2.6%. Very close to that 2% that we want. So I was much happier to see this number than the GDP number. The GDP number is cool. It's awesome. It's fun to see. I'm glad it's growing. It's also a not a very stable number. So it's interesting there. Core durable goods. And durable goods came in much better as well. We can see came in at 4.7% from the 2.0 last time. Month-over-month core was flat. Not a big deal. That's there. We also saw consumer spending take a bit of a hit in Q2. That's the estimate for Q2. That's not good. That's what kind of inclines me to say is, how are we not going to have a recession if people aren't spending money? I know it's one of the smaller variables out there, but kind of want to keep that in the back of our heads there. So we discussed the events of yesterday. We discussed the events of today. Now the important one is tomorrow. Now Jerome Powell has said that, hey, we get the data. If we want it, we can get it ahead of time to help our decision making. We know they raised rates 25 basis points yesterday. If they wanted to, they could have skipped if they wanted to, but it's inclined for me to think that, one, they did this because you have the whole summer without the Fed. Now, whether you like that or not, you're not going to see Jerome Powell and the Fed directly in an FOMC. You'll see them at Jackson Hole and other places. The Fed members love to talk and go on their tours like they're pop stars. But you see the PCE data coming out tomorrow at 8:30 a.m. Eastern Standard Time. This is the inflation metric that the Fed uses, and it's estimated to come in lower. So PCE, regular price index for month over month, is estimated to come in negative. Very happy if this comes true. This is a good sign that inflation is truly turning around. Then you have PCE year over year, the regular price index, going from 3.8, another big whopping drop down to 3.1. This would be the second big whopping drop down. So if we look at the last time, we went from 4.3 to 3.8. This is another big whopping drop to 3.1 if we get there within the range. That's the thing there, if we get within the range. Markets need to see you hit the forecast or come in lower to react well. If you don't forecast parallel or come higher than the forecast, the markets will be like, we're too optimistic, sell, sell, sell. Usually, not always, not guaranteed, but you guys know, not financial advice. Core, which is the heart and soul of inflation. This is, if you had to boil down all of FOMC, all the rate hikes down to one single individual variable to look at, throw everything into the woods, focus on this one thing, it's going to be the core PCE year over year. Most important one. It's forecasted to come down again to 4.2 from the 4.6 that we had last time. That's one that I'm watching very closely. Markets will react one-to-one to this. Simply put, you come in line or better than the forecast, mazel tov, markets go up. But you come in low, you come in a little higher, 4.3, 4.4, markets are going to be like, core is still a pain point. Core is still a pain point. And you could see a bit of a sell-off there. Now, we discussed the market events. Next week, I know I won't see you guys till Thursday, but next week, you don't have much market events happening. You're really dancing with the earnings calendar. And I just want to quickly check the earnings calendar that I have on the screen. So we had Meta come out yesterday. Meta did very good. The day before, we had Google come out very good. Microsoft came out not so good. Boeing came out very good. Chipotle missed. Sorry, guys. Guac might be getting more expensive. I'm just kidding. I haven't looked at the report to say that. But they did miss on sales, which means they might have to raise the price of guac again. And I'll be honest with you. The price of a Chipotle bowl from when they first came out to now, if you want a true metric of inflation, look at that thing. It's not been pretty. Today, after market close, we've got Ford, Intel, Roku, First Solar, T-Mobile, and Enphase reporting. So these are, again, Intel and Roku being probably the bigger boys here, and Ford being, if you're looking at the EV markets and kind of the sympathy plate to GM and Tesla, that's kind of what you want to kind of keep your eye on there. The solar boys lined up, so Enphase and First Solar are reporting on the same day, so that's kind of good to see there. I don't really play the solar markets, to be honest with you, but I'm interested to see what Intel does. Intel will be the first of the chip makers reporting. Next week, you got Apple coming in, so they'll probably be setting the tone for how the chip makers are going. And of course, this is on the tails of, it feels like just a few weeks ago, where Nvidia put out guidance for $11 billion for Q2. So Intel's earnings tonight, this evening, are going to be playing a very, very big factor on how the tech markets react tomorrow, because tech chips and semiconductors make up a huge portion of the markets. It's going to affect Apple, AMD, Nvidia, Intel, of course, Marvel, MVRL, not Marvel the comics. But you can see that whole big kahuna there. And then you got the energy boys reporting on Friday with ExxonMobil, Chevron, those guys. And then you got Procter & Gamble, which is a household goods one. I keep an eye on those guys for when it comes to household goods and such, to kind of see where the world is kind of operating. And I apologize, I thought I had this calendar on the screen, but I didn't. But now you can see it too. If you want to take a snapshot, save it for later, whatever you want. This is kind of the story that we're following here, and it's going to be an exciting one. So now let's go and take a look at some of the price action that's been happening today, reactionary to all of the good old GDP data. We're going to come to ES soon. I promise we'll jump back to ES and kind of take a look at it there. But I want to start off by looking at some of the names that reported last night, and really the biggest name being Meta. Meta reported last night, and Meta hit off to a banger. You know, they had a big gap up, but this puppy right here, let me turn on extended hours so you can kind of see the move in real time, jumped up into the after hours, nice big pop, cooled down, kind of slowly inched its way back up this morning, had a little bit of a sell-off, then rampaged back to 330, and has been kind of selling off intraday with stair steps, kind of stair-stepping its way down. And I'll be honest with you, earnings were good. OPEX is going to be a little higher. CapEx, capital expenditure, is going to be lower, which I think the capital expenditure being lower has been the biggest pain point for our friends at Meta, formerly known as Facebook. So I think that's what's helped with this move here. But you also want to keep in mind here, if we go to the daily chart, Meta just a few months ago was trading at 230. So you're up about $100 from May 5th. So anyone who bought around this kahuna session here is looking to take profits on this massive rally, and that's healthy. You want to take profits to a rally. This gap never filled from their last earnings. So will this gap fill from their last earnings? I don't know. I'm not a huge fan of Meta, to be fully transparent with you guys. And their business model, I stick to Google, which is going to be the next one I want to take a look at, because Meta and Google worked sympathy. When Google's earnings came in and they did well, I was inclined and thought and said, hey, Meta's probably going to do well, and they did. And we can see here Google gapped up, big gap up for Google as well. Google's been sustaining herself much better than Meta has, but these candles aren't beautiful. Look, you had the bull flag here, bull flag broke out. You had this really indecisive doji candle here, and you got this reverse hammer candle here. It's telling me that the bulls had their heyday, but not Mayday, but they might be coming in for a Mayday if this puppy starts to reverse. I'd like to see these gaps filled. This big gap here, you'd need some ugliness or some event to come in and fill this gap here, or maybe over time people come to their senses. But really, the ugly guy here in the markets that's kind of been the pain point for the tech markets has been Microsoft. Microsoft's earnings came in pretty soft, and they did beat, credit to them, but the Azure cloud computing services kind of sucked, missed by 0.6 billion. And then they came out and said, hey, credit to them, they were honest. They said, hey, our earnings markets, our future projected earnings for AI, curb your enthusiasm there a little bit. It's not going to be the big fun, steady, fast, crazy bullet train ride. It's going to be a slower train ride. It's going to take us some time to get there, but they didn't say by any means that it's going to be bad. But the stock has been kind of taking a bit of a beating. It's sold off for 2 consecutive days now. It's down to the 50 EMA on this chart. If we kind of extend this channel, we lost the channel a while ago here for our friend here. So this channel is really invalidated, and let's delete it. Let's get rid of it. So if we want to kind of see where this puppy breaks out and kind of makes its way back up. And look, if you like Microsoft, like I know Jim Cramer was pumping this thing on Twitter. I don't know if those screenshots were real or not, but he was pushing this thing on Twitter. But really looking at this thing, in order for it to have a fighting chance in hell, it needs to break over this 50 EMA and then get over the 350 threshold to make its way back up. And then maybe you have a fighting chance. But right now, this thing's paying back a lot of the massive gains it had thanks to the ChatGPT revolution, right? Oh, these guys are working with ChatGPT, run the stock up. That's what happened there. So I know last but certainly not least, Tesla, just because we talk about Tesla almost on every single episode. I'm a sucker for Tesla. So we have this guy right here, ran up, Tesla earnings came out, gapped down, kind of consolidated, reversed a little bit here, but it's kind of been stuck under the 9 EMA on the daily chart. Needs to break over this, needs to break over the 20 MA, in my opinion, in order to make its next leg up and kind of try to get back to that 280 point and fill this gap. You need some sort of news. Tesla, unless it gets some news, doesn't really rampage on its own. So that's the story. And you have a bit of an overhang happening right now. Is Elon going to sell more shares to fund the whole of Twitter, which is really, it's not Twitter anymore, it's X Corp. But that's the story there. So let's go to my favorite part of the show, events contracts. So folks, if you're not familiar with us, with Tradeovate at Place Your Trades, the biggest thing that we'd like to do is we discuss event-based contracts. Event contracts allow you to trade in a much less riskier way, essentially parallel to futures contracts. These event contracts for the S&P, the NASDAQ 100, the Dow Jones, that sweet, cute crude oil, gold, the Russell 2000 Euro, Henry's natural gas. I'm just joking when I say Henry's natural gas. It's Henry Hub natural gas. Silver, copper, and for our crypto friends, they even gave them something, Bitcoin. So how this works is with event-based contracts, you're kind of taking a bet. These are 0 DTEs. They expire at the end of the day. You can't buy them for the future. And these do not multiply by 100x. These are if it says 12, it's $12 a contract. You're essentially betting or guessing or taking a chance on the fact of, yes, we're going to close over a level, or no, we're not going to close over a level. And of course, you know me, in charts we trust is one of my favorite sayings that I like to say. We got to look at the chart. We got to jump in and see what's going on. So our buddy here, we had a massive run up thanks into the market open. And it's been really all green lights. Essentially, you had two little small red lights, really stop signs, not even red lights, right here on the way up. But we ran all the way to 46.31. Big rally up. And then the 20 MA has caught her. So for me, the 46.11 range, is holding up very well. So I'm inclined to say that we hold over 46.10, which is this level here. Inclined to go with this contract right here, saying, so if I buy this contract, I'm saying that yes, we will close over 46.10. Now, what happens if I'm correct? If I'm correct, at the end of the day, my contracts get cashed out at $20 a clip. You can also have the ability to take profits on the way up. If you purchase your contracts, you buy 10, 20, 30, 50, 100 of them. You purchase your contracts and they start going up. Let's say we go from 12 to 15 to 17 towards the middle of the day. You get a big spike and you want to take profits. You have the ability to do that. Let's say you're on the wrong end of things. Things are going against you. Hey, no. I'm having a bad day. I need to cut my losses. You have the ability to do that. But if you buy a contract and if it's wrong, at the end of the day, it expires to $0. You buy a contract and it's right. At the end of the day, it matures to $20. You cash out. You have a nice chicken dinner or steak dinner if you buy enough contracts and it goes your way. You have the ability to party. So let's take a look at ES a little bit closer, and then we'll dive deeper into exactly what the plan will be here. So we have the story here. Let's take a look on the hourly chart. Actually, let's take a look at it on a smaller interval for a second. Let's go to a 15-minute chart for a second, see how things are actually playing out in real time. We want to kind of zoom in. Sometimes those bigger candles could be a little off-putting, but you can see here this thing stair-stepped its way up like we said earlier, but it's kind of been flushing into the open, and that's really due to the tech markets not doing so great. The technology markets kind of sold off into the open, and they're kind of flatlining. And I use XLK to kind of see where that's going, but the S&P itself did also sell off parallel to tech because the financials are also selling off. XLF is also selling off, but you're seeing it kind of trying to find its barrier, trying to find its footing around that 20 MA on the hourly chart, parallel to the 46.11 range that we have here. So I'm inclined to say if things go well and we kind of get the bounce, and look, data came in good. You got what the FOMC wanted. I understand you have to price in a 25 basis point rate hike now, and that's kind of probably why some people are being very hesitant with this little dip here and not buying it up right away and sending it back up, is you need to price in that 25 basis point rate hike. I know some people say it's already priced in, but I come from the camp and I've seen based on evidence that nothing is ever truly priced in. So if I'm inclined to say so, and I'm a bit bullish today based off the data, based on everything's going on, I'd say I'm more inclined to say that yes, we close over this 46.10 range. Now, if you come in later during the day, around the afternoon, around 1 to 2 p.m., and you can get over this 9 EMA here, which is at 46.18, you probably have a better chance if you went with the 4620 contracts for this puppy to go your way. So as you can see here, like you can bet yes, we're going to close over 4610, or you can bet no, we're not going to close over 4620 just because of the resistance range that you have forming here. So you have that. The arbitrage really here is a little bit better to your side on the 4620 because the contract's a little cheaper. But you can even see here, we're up 75 cents on the move from when we decided to go with the over the 4610s. So you can see here the cool thing about these event contracts is they move just like options do. They move very, very parallel to options in reaction to price action. And they give you some moves there, and it kind of, the party, let me zoom in a little bit. I apologize if that was a little bit zoomed out. But you can see that the party is tame. It's a tamer party in that you're not risking $1,300 per contract if this was a real options contract because you have to multiply it by 100. But you're risking $13 to get $20. And that's kind of, if you run the math there, you got a 54% mover there if you're correct. And if you're wrong, it's $13 out of your pocket. You're really not going to feel it. And of course, you got to multiply that by the number of contracts you buy. So on the event side of things. So looking at this today, this is the big resistance wall that we need to really get over is this guy right here. And we've built some good support here around the 4610. If this does give out, if you start to lose this barrier here and you come down, it is going to go against you. For our stair steps on the way up, I don't know why you went to this purple color. I really hate the color purple. I don't know why it switched to purple for some reason on me. But our barrier of entry, our resistance here is this line. If we can stay over this 4610, we can start making stair steps up. If the bulls wake up, if I know they're taking a nap right now because they had so much action in the pre-market. But if they wake up and they send us up, our contracts do well. If the bulls sleep in a little bit longer and they come down, it'll go down. But again, I understand where the hesitancy is from. It's really due to the fact that we're going to be getting that PCE data tomorrow. If it doesn't play ball, it's going to be ugly. But if it plays ball, the party goes on, we start chugging up. I wouldn't be surprised if we make it back to 4631, 4633, 4635, 4638 on their stair sets up. But PCE comes in uglier. You're probably going to give away a little bit of this juice that you had. Let me go to SPY really quickly just to kind of show you guys in the grand scheme of this $3 move. So you can see here we closed at 455.51. We opened at 459.02. So you had a big move there, a little bit over $3. And you can see it's kind of trying to fill the gap here, but the 9 EMA on the 15 minute is holding it. Let's take a look at it on the hourly. Same style situation. I'm inclined really to want it to hold that level, but if it does flush on, this thing is just having a hard time with this candle here. So if you wanted to, you could hedge your bullish bet. So let's say you went with the 4610s yeses, you could hedge that and say, you can also hedge that and say, no, we're not going to close over. So you can kind of put the $20 in, and then one of them is going to hit, and you're going to walk out a winner on one end. So you spend 20 on one end, you're essentially nullifying your risk. Essentially, if you buy both contracts, one of each, you're spending 20 because the sum of them is 20. One of them is going to hit, one of them's not. You're essentially going to come out decently on one end or the other. So that's kind of the story for us today with Tradeovate. Make sure to sign up for Tradeovate to be able to sign up with these contracts. The link is down below. Make sure to go to the Place Your Trades network. I want to show you guys the website. If you guys log in and sign up, there's a plethora of information on here. There's so much information on here that you can sign up. They got a massive dashboard. Chai Girl's blog that comes out. It's so good. So good. I want you to make sure to check it out. If you have any questions, go to the FAQ on our website. It'll answer a lot of these questions on the event contract stuff. If what I said wasn't clear to you, the answers will be here for you. And of course, you can make sure to follow us on Twitter. You're on the YouTube, subscribe. If you're an Instagram person, go on Instagram. There's some stuff happening there. And of course, you can catch us on demand. You can see that the network of events happening. We got stuff for you every single day, value every day. Monday morning, Tuesday, we got 2 for you on Tuesday. Wednesday, you got the double feature. Thursday, you got the double feature. And then Friday, we ended strong. So we've got something for you for everyone here. So thank you so much, folks, for watching. I hope you learned something. I hope you had some fun with us today. Make sure to sign up. Links for everything are down below. You want to follow me? I'm on Twitter. Follow me there. Make sure to subscribe. Make sure to sign up. This stuff is so cool, so much valuable information. Even if you're not going to trade the event contracts, and they might kill me for saying this, sign up for the Place Your Trades website. Watch some of our shows. You'll fall in love with it. You'll learn how it works. Then sign up for Tradeovate. Figure out how everything operates, and we can have some fun there. All right, guys. Thank you for watching. I'm your host, Ryan. See you next Thursday. Bye-bye, and good luck.